Happy Tuesday, everybody. I hope you had a great long weekend and a great Independence Day. My thoughts and prayers go out to all of those in the Highland Park area, only about 20-30 minutes north of me, where the shooting at the 4th of July parade occurred. We actually were at the parade right before COVID. Our prayers for the recovery of all that were affected, both physically and mentally, and condolences to all those who've lost loved ones. May this be the last time we have to address things like this. Today's the 5th of July, 2022, and this is your Tuesday market update. We have another holiday shortened week this week, but if the past few years hold true, it will be an action-packed week nonetheless. As we enter a relatively quiet time of the year, kids are off to camp, summer's in full swing, and we're in the first week of the second half of the year. Let's recap what happened last week in the markets and preview a bit of the coming week. Last Monday, markets opened at two-week highs following the strong prior week. Morning gains faded within the first half hour. The market digested mixed news. It stabilized, revisited those highs around 11 a.m., and then it chopped sideways until selling started after a bad 5-year Treasury auction. Stocks bounced off the lows, but ended slightly lower. All three indices ended down less than 1% of the day. The discussion continues about if the bottom is in or if we're just going to continue to bounce around. Stocks opened higher on Tuesday as the markets digested changes to one of the keys to the market that we've been talking about. China COVID policy looks like it's changing. Quarantine times have been lowered for positive case exposure as well as those coming into the country from overseas. If this does not do an about face, as it looks like it might be doing right now, we just have to see how it goes in the next couple of days. This is a good sign. Remember, the second largest economy in the world is still working on a zero COVID policy. Keeps shutting down 2 of the largest cities in the world. Kids are headed back to school as of now. Workers back to work as of now. This is a good thing. The market we'll see how that goes. The market made an attempt to stabilize at midday at the technical 38.50, but the stocks did roll over again after another 7-year auction that was disappointing. Selling was steady. Indices ended near the day lows for the day. The S&P was down about 2%, Dow down 1.5%, and the NASDAQ almost 3% on the day. Wednesday was once again a revisit to the Shakespeare, sound and fury signifying nothing. Actually, not a lot of sound and fury at all, but the stocks ended almost where they started. Unlike so many of the previous days, the moves were never too big on the day. Eco news was heavy, though. Hot CPI in Spain, cooler in Germany. Are we really getting that granular at this point? Yes, we are. Q1 GDP here in the U.S. was revised to even lower than the first read, now down 1.6%. It was earlier reported down 1.5%. Not a huge move, but remember, if we get a Q2 number that is also negative, we'll be in a recession by definition, in case you didn't think we're already in one. We may be there soon. 2 quarters of negative GDP. Estimates are at 0 for Q2, so we'll see how that goes. Powell did speak in Portugal and did reiterate that the U.S. economy should be on strong enough footing to handle the rate increases without stalling the growth or rolling over. He's still hopeful of a soft landing, but their commitment is to lowering inflation and making sure that it does not become persistent. It doesn't become a persistent problem. He does acknowledge that the attack on inflation may send the economy into recession. Quick side note, before you think this is all a Debbie Downer, let's realize, as I mentioned all the time, that the stock market is a forward-looking mechanism. Realize that the information I've just mentioned is why there has been $10 trillion of paper wealth lost since the start of 2022. Add crypto in there, you can add another $2 trillion. Thursday brought the end of the worst first half of the year in the market since 1970. The markets opened lower on the back of core PCI report. As we were watching for, it did come in a bit lower than estimates, but still at 4.7% for year over year. The optimistic look at this and say that it's down from the last read. The pessimistic read, which is where most people are right now, is that it's still too high. Stocks did gap lower on the open and proceed to sell off with recession fears. RH cutting guidance just a few weeks after they reported earnings. They reported a sudden drop in demand. That did not go over well. Other eco numbers with jobless numbers higher again, personal consumption missed estimates, and the previous print was also revised down, so consumer spending is coming down. The read on that is also negative. But remember, this is the demand destruction that the Fed's trying to get. So the inflation comes down. I'm not sure why there's all this surprise. This is the plan. We need the growth to slow, not to roll over. And there was an attempt to rally at midday in the markets, but no follow through. So the S&P ended at the middle of the day's range. S&P down 0.88%. The Dow was also down 0.82. NASDAQ down 1.33. Second half of the year started off with a mixed day. Friday, July 1, opened a bit lower. As I mentioned last week, it was a slow day. Summer Friday before a holiday weekend. Stocks moved between positive and negative territory as the news was pretty quiet. By the end of the day, the week was still negative despite a strong day for the S&P, up about 1%, along with the NASDAQ just up over 1%. The Dow ended up 1% for the day also. Overall, the Dow was down 1.3% for the week, S&P down 2.2% for the week, and the NASDAQ down 4.1% for the week. Bond prices were up big. 10-year yield moved from nearly 3.5% we saw 2 weeks ago to 2.89 we saw it close on Friday. This week, markets will try to figure out what moved the markets. Was it oversold? According to most technicals, believe it or not, no, it's not oversold. Is the market pricing in things getting better? Or is it time? Are we seeing dip buyers step in? We'll have to see how this plays out. We will see earnings in a few weeks. Banks start the parade on the 14th and 15th. As I've been talking to you about this before, earnings estimates and price targets keep coming down. In the research that I'm reading every morning, there are 8 to 10 price target cuts and at least a 10-to-1 downgrade to upgrade. So the bar is being lowered. We'll just see if the earnings season comes in above that bar. This coming week, the first full week of the month, as usual, we'll start with a look towards the Friday jobs report. Many are saying that this will be an oversized report as far as importance for everyone who's worried about recession. Before we get to Friday, rest assured there's plenty of leftover fireworks to go off. Yesterday was, of course, closed. Today is actually planned to be pretty quiet on the news front, just May factory orders. Wednesday, get ready for the pyrotechnics. Fed minutes will be out at 2 p.m. Eastern, along with the Fed heads, this time Williams, and we'll see a bit more of the rocket's red glare with PMI reports, ISM reports, and the JOLTS report. Thursday will be lighter in the big news reports, but wait for Fed heads Waller and Bullard to add to the jobless numbers and the ADP report. Friday, of course, is going to bring a few of the real stragglers in earnings, WD-40 and Levi's, but also we'll get Williams speaking twice from the Fed and the big June employment report. We're going to jump right into the second half of the year. There's a lot left to write in this history book. Remember, midterm elections for one, so we have a lot to go. As always, this video is for the deep color on what's going on. Please keep focused on your goals, your time horizon, your overall financial plan. That's where we're going to keep our focus. Stay nimble. Please stay in touch and have a great holiday shortened week. It's Tuesday already. Again, weeks without a work Monday, not a bad thing. Have a great week.